Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is February 22nd edition of Market Outlook. Well, quite an interesting week after the market sort of stood in pause mode for almost 4 days. We broke out convincingly to the upside. And let's get right into it. First of all, look at this chart here. You can see, interestingly enough, for the month of February, the highest volume day on an accumulation day. Not really excessive volume, but enough to call it a accumulation day overall. Still not overbought. And look at this. New highs, it paused. It looked like the market might sell off with some negative news coming out on Friday. The market quickly rejected taking out the lows of the last 3 or 4 days in most of the indices and then roared to the upside on good volume. Can't really argue about the upside momentum. Any negative information about the market seems to be shrugged off and momentum continues. Basically, there's your upside in terms of the channel. Let me get that a little bit more precise here. So clearly, quite a bit more to the upside. You're looking at maybe the 215 level or so before we might run into some profit taking as people look at this extended channel here, right? We drop a parallel and we can see again that the market basically has been operating in this longer term channel here. And the upper end of it would probably get you overbought and at the top of the channel as well. You can only look at all the other time frames here and it's all positive. Let me move this here a little bit. And okay, now let's take a look at IWM. This is probably one of the more interesting indices. Again, this closed not quite as strong on Friday as the S&P or NASDAQ, but looking for this to really kick in at some point. You got a tremendous amount of consolidation and compression. We've been talking about that, and once this thing can generate some power here, that would be excellent. Now, interestingly enough, also another really good volume day. So across all the indices, you're getting really good follow through. NASDAQ, which was lagging for a while, had the strongest performance. That really is moving out to new highs convincingly. So what was seeming to lag really kicked in over the last week or so and is now resuming its leadership. I take that as a good sign. One little bit of a fly in the ointment in terms of NASDAQ. It is getting pretty rich. You can see we're at 99% on the short-term RSI and on a 50-day Bollinger Band as well. So just take a note of that. NASDAQ is running rich, but is quite strong. So potentially buying brief pullbacks in NASDAQ is the formula for some profitable trades going forward. Let's take a look at volatility. Here is looking at short-term versus longer-term volatility. And as you can see, we pulled back a bit at the overbought ranges, but they can get, and as you can see, a lot more overextended. What I'd be looking for in looking at this ratio between 3-month and 1-month volatility is a break around the 0.9 level, and that would be an indication that the rally got a little bit too rich and is stalling. Let's take a look at the McClellan oscillator. You can see it's been stuck sort of in the middle, so there's plenty of room to move to the upside or downside. But overall breadth is sort of neutral here as the market goes forward. So that's I take that as a positive sign. The last signal we got was really a buy signal back in December. The market went sideways, but that signal still intact. Let's take a look at a couple of other things here. Let's take a look at Greece. Let me get a symbol in here, G-R-E-K. For some reason, I'm not able to change the chart here. Okay, so here's Greece. And you can see for the first time, we've actually now trading up on the year. That's a good sign. So essentially, you've got a potential head and shoulders bottom tracing out. Now, of course, all this news out of Greece seems pretty iffy, but nonetheless, the market seemed to have shrugged off the fact that they're actually going to leave now. Problems are still lurking. We have this 4-month forward-looking issue for a long-term agreement between Greece, the level of austerity that it agrees to, and continued bailout terms. So, you know, expect increased volatility, but meanwhile, it seems to have resolved itself to the upside. Tremendous volume as well in this Greek ETF. So that is of interest. Certainly buying this on some weakness as maybe some of the news gets shaky seems to be the formula. On the other hand, you do have this this chart here where it looks like a move back up to, hold on, let me move this out here, certainly up to the 200-day moving average, and some resistance comes in about the 1750 to 1820 level. So that's your next real level of resistance. But look at this massive volume, 5 times the normal volume. Let's see how we do on Monday, some follow through. But again, as the news is going to come out back and forth, I'd look to buy maybe a pullback after a bit of strength, especially on the intraday charts. So OR reversals, opening range reversals would be a good way to play this, especially if you have wide range in the first 30 minutes of the day. Okay, let's take a look at what's happening in Russia, because things are still simmering there. And as you can see, RSX also doing a bit better and pausing at the breakout level over the this consolidation and compression. So again, even with the news and the ceasefire shaky and Putin still not happy with the West at all and nervous about heavy weapons being introduced by the West in Ukraine, markets held up rather well for the week. So look for continued strength in this and a potential buy on weakness. I really would like to see this market hold the 17 level, which is really where it broke out from. Ultimate support really comes in here at around 16 or so. But again, first level of support is this 10-day moving average. Overall, market's not overbought, so could see some further movement to the upside. What is most interesting, of course, between Greece and Russia, you've got certainly a scenario where the big pressure on the markets is abated, hence the convincing move in the U.S. indices and other stock markets as well. So for instance, EWG, Germany, key player here, breaking out above the 200-day moving average. And nice move on Friday, convincing breakout. Again, at this point, you could also watch Germany and make sure that it holds the 200-day and the 10-day. This is a critical point here. If we break down here that would not be a good sign for the markets. So again, overall, equity markets are really looking pretty good here. Let's take a look at TLTs. These are the 20-year bonds. Really have been under a lot of pressure. There's a potential that this top put in here with this sort of a gap down and an island type reversal could be a longer term top. One thing you never know is, do the short-term reversal patterns develop into something more significant? Again, a key point here would be over the 50-day moving average, and that would resume the longer-term uptrend in bond prices and obviously down in yields. I know a lot of professional players are looking at this as a potential buy opportunity within the longer-term trend, and I'm sure that there is some sort of a bounce. Whether it's going to materialize and end up back at new highs, I would be looking at Russia, oil, and what happens in Greece as to the question of if this is really going to reverse back up to the upside and take out new highs again. And remember, during those two crises that were unfolding, the flood to U.S. dollar and any U.S. denominated assets really drove this up to the higher end of its trading bands. Pretty good volume on Friday, and again, mostly sideways action under that 50-day moving average. So you do have a pretty strong slope to the upside. So wouldn't be surprised to see with any type of uncertainty coming out of Europe on any of those accounts, Russia or Greece, you could see a definite nice bounce off of this. You are getting pretty much oversold here, certainly on the longer term Bollinger Band, the 50-day. Not quite there yet, but starting to work its way down. But just looking at this from a pure price movement here, you got up to that 138 level, down to 126. I mean, that's a pretty sizable move. So let's watch that 10-day moving average first and the highs of Friday in TLTs, and for a real confirmation to the upside, a takeout of this rising 50-day moving average. One last thing, we'll take a look at gold. Gold, which was looking really firm on the year, now looking under pressure. Again, look at this 200-day moving average pointing down, 10-day really sharp, 50-day flattening out. You're right into the core support level, but again, phase is bearish. And again, we're going to look at that similar to bonds. Look at that 50-day moving average as a key level, or even if you're a shorter term trader, look at the compression here, 1, 2, 3, 4 days with exactly pretty much the same highs. I'd be watching that level as well for a tradable opportunity for a pop to the upside before running into some overhead resistance here. Okay, that's it for now. Have a great weekend. Stay frosty, because these markets definitely require your attention full time, and things do change. So we are susceptible to news coming out of the Ukraine and out of Greece and the ECB as well. And remember, don't forget to sign up for this at www.marketgauge.com, and see you here next week. Thanks, and bye for now.